Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to the markets next week, the weekly technical market analysis show. And this is for the week starting September 6th, Monday 2021. If you're not subscribed, right, please do that right away and also share it to your friends so that they can also benefit from it, right? And also it helps to motivate us further. So, without wasting time, let's get into it, right? So what a week it was, right? Wide range bullish candle was seen on the Nifty, right? The market made another all-time high and it further accelerated with 5.5% on the upside is what happened, right? And Banknifty joined the party, like 4% move happened in the previous week on Banknifty. So that also formed a bullish wide range candle on the Nifty and then got stuck at 37,000 now, right? So daily candles, if you see, it's a small body but green candle that you can see on the Nifty, while Bank Nifty latest candle is a kind of a spinning top, which is a spinning top that is at a resistance zone and on a rise is slightly dangerous, but that's we'll see that when you see the momentum and the trend, you can see that that's may not be a problem, but something to keep in mind. Bank Nifty is forming on daily, which is short term, but look at the candle on the longer term, the weekly basis, right? It's heavy bullish, but short term there is a spinning top. Nifty has no issues, it's roaringly bullish as per the candlestick patterns. Now, if you look at the Bollinger Bands, you can see that there is volatility expansion that has already happened in Nifty and is rising on the bands. Bank Nifty also last week started rising on the bands. That's what you see on the volatility expansion that is happening. Look at those, what you are seeing. See the Nifty on the left side. You can see the candlestick. On the daily, it is showing a small body. Not exactly a spinning top. Wick is not that large. But Bank Nifty has got a spinning top. Clear? On the weekly basis, if you see, it's wide range bullish. Wide range bullish on both. So, short term candle does not matter. The market is moving like this. Right? Look at the Bollinger Bands. You can see that it is walking on the bands. The skews is over and walking on the bands up like anything, right? Even Bank Nifty also started walking, but the last candle is kind of spinning down. Now look at the support and the resistance for the markets next week, right? Nifty 1750 to 17150 for support. Below that you have 16700, 16750. Then you have 16500, 16600, and then you have 16375. Right, these are all approximate levels, not exact, right? And the resistance supports that 15350. We are very close to that, right? So that's a FIB 38 projection level. That's 17450 also is a projection 50 Fibonacci 50 projection, and 17750 above that is resistance. This is FIB 61 Fibonacci projection, right? And Bank Nifty, you can see 36,200 and 36,500. That band is the previous resistance, the previous swing low. That's the first support. Then 35,500 and 35,800 is the second support. Then we have supports below, further below at 35,000 near to that level. Right? And then you have above that you have 35,100 and 35,400 kind of levels. You'll see the charts, you'll understand this. Let's see this. So this is Nifty supports, right? So this is the FIB 50% projection level. The resistance there. Further up, FIB 50% here also is supports this zone, discuss this zone and this zone, right? And this zone. This is what I mentioned. Bank Nifty all-time highs resistance up. Rounding number 37,000 is the supports down here and down here. We saw the levels, right? These are all levels where either it is Fibonacci retracement levels or wherever there is a previous swing low or a previous resistance came into picture. That's how we put it, right? Look at the momentum indicators and the trend indicators. For the Nifty and the Bank Nifty, both of them are now RSI having bullish momentum on all time frames, daily, monthly and weekly. So it's super bullish. Nifty has bearish momentum divergence that is there, but it is very large number of candles, so it can say it's diluted, may not work out. But you have something that you have to be cautious about. Keep in mind that there is bearish momentum happens when there is a price that is rising and the momentum that is going down, opposite, right? Keep that in mind. So ADX indicators are bullish and rising in all time frames. So Nifty and Bank Nifty, that's reality. So trend and momentum is super bullish as per the indicators as of now. This is what you see. See the momentum on left Bank Nifty, left Nifty and right Bank Nifty. It's both above 60 hours. Divergence is what we, this is the large number of diluted divergence, that something that you have to just keep in mind. But if the divergence is very small, it's very effective. If it's very large, so it may not work out. Look at the trend indicator ADX. This green is indicating the strength. Blue is indicating whether it is bullish or bearish. It is bullish and with heavy strength. Right, Bank Nifty, it's bullish and strength is started rising, and both are on the weekly. Mind that, right? Weekly and daily and monthly all have trend indicators which is now turned and then rising upward in the strength point of view and already in the bullish zone solved. Now, open interest analysis, right? On the futures shows that Nifty is long build up, but Bank Nifty is showing short build up on the futures contracts. Option interest highest rating is 18,000 call rating. The resistance is only at 18,000 for the September 9th expiry, and after that you have resistance only at 17,500. Now the put rating, the support is seen as high as 17,200 and 17,000 below it. Right? Bank Nifty it is 37,000, 38,000 where the highest call rating is. Put support is seen a little farther away, 36,000 and 36,500. Right? PCR is bullish. It means it's in the bull zone above 1. The Nifty, but Bank Nifty is less. It's kind of slightly towards the bearish side, 0.7. The VIX has shot up 8.8%. It had dipped 5% previous week. Keep in mind. See, that is the spike that is happening. That is what is making the market jittery. Right? And finally, now the VIX is not 50, close to that, 50, 14.54. So there is a chance if it is going to sustain at that 15 levels, then you can say the VIX is in a new volatility. But suddenly one day it dips to 13, then again shoots to 15, then there's no advantage of that. It continues to be in the old low regime level only. Right? Implied volatility, if you see, it's 12.9, which historic implied volatility is 8. So implied volatility is higher than the historic, which is okay. But IBP is still only 15%. It needs to go above 50 at least for the sellers to benefit from it, right? So look at the VIX charts now, it shot up. Right? Now this is the open interest data we talked about. 18,000 is where the resistance before that you have hardly 7,500. Here you see this is 37,000 which is to be conquered, which has got large resistance. So this both charts in general if you see slightly bearish, but call ratio combined with that and then look at the supports if you see, no? So there is bearishness overall if you see, but it is only one. We'll come to know only about that more in the as this expiry plays out. Now, sectorial watch. How do the sectors perform? IT sector again moved up. The dollar has fallen down. Still the IT is moving up 2% up. So you have to be careful. It's done a vertical move and the dollar is weakened. So this move is sustain or you don't know. But as of now, momentum, trend, everything, candlestick pattern, everything is super bullish. There is also a diluted bearish direction which can play out. Diluted because large number of buckets are in the weekly. Now FMCG nearly 4% it has moved. This is where it is clearly bullish. Right? Previous two weeks also it had broken out from the resistance zone. Right? So expectation will further move. Right? So FMCG clear bullish. Metal also moved, reverted and moved 5%. Right? And there is a bullish reverse divergence which is bullish and it worked out. It is still working. Right? You can further move up. But you have to wait on the daily time frame for the RSI to catch up. Right? Now auto sector has got 2% move up, so that is also reversing. So we thought it will go to the bottom of the neckline of the double top M pattern, but not happen. So auto also is reviving, so bottoms are already made probably. So reversal is seen there, but not at bullish. Metal also reverses, then not at. We have to wait a little more for the bullishness to happen. FMCG is bullish, IT is bullish, and pharma also is reversing along with auto. in metal, right? 4% move happened, and it is a clear bullish wide range candle is there, right? So now pharma is actually almost turned into bullish, almost. Both weekly and daily is having good momentum, so you can include pharma, FMCG, and IT as bullish sectors, and metal and auto. You have to wait for some more time. The momentum and they're trying to catch up. Now the stock pick for the next week, one is Interglobe Aviation, that is showing a head and shoulder inverted pattern, which has already broken out of the resistance zone. And on the right side, you have Bharat Electronics is also having a rounding bottom pattern. It is also broken out of the major resistance zone. Right. So these are two picks. For more details, you can check my Twitter, where I will be keeping posting every day on the updates. Now, institutional participation is interesting. 6,850 crores of mega buying has happened from the FA last week, but 1,400 of DI selling happened. Natural. They've been booking profit because they were supporting and buying previous weeks. Net longs on the derivative also, FI DI were rising last week inside. So that is positive that FIs are buying heavy. Now, US market, what happened after the tapering announcement by the Fed chairman? Right, the Nasdaq and the S&P rose up, but Dow Jones little jittery, little slight bearish small board candle, but overall US markets did well last week. Dollar index has fallen. The dollar is weakening further. Right, 0.8% of fall again happened. Right, there is a false breakout that happened 2 weeks before, and now it has been dipping for the last 2 weeks. Right, crude oil had shot up last week. We hit the 73 and then fall down and settle the 73. So nowadays indecisive doji carry. So dollar is, crude oil is kind of moving between 64 and 73. It's moving up and down. So there's uncertainty there. And the USDINR currency pair, you can see that it fall further. The rupee strengthened for further 0.75 fall has happened on the USDINR currency pair. Right. So IT rally could be impacted definitely, as I told that. Gold, you can see that it is rising up after the bounce, the hammer bounce that happened a few weeks back. So for 4 continuous weeks, it is moving up, and now it has reached the channel top. You can see that there is a monthly, there is a cup and handle formation, and the handle is getting formed, and looks like this triple testing of the of the hammers that you see there is finished, and the candle, it could just hit a resistance zone and it could break out of this channel, and then that would be a big move if it works out. So that would mean that the cup and handle monthly pattern is breaking out and it is going to be mega move. So this may be a good time to go long on gold. Now VIX continue to be 14.5 is also a very low level. Last week it was 13.4. So it's not settling at one level. So spikes are there. So wake up positive strategies and like counter spreads can work out, as I have been saying it the same thing for the last multiple weeks or months probably. So this is one strategy where the assumption here is that it may consolidate a little bit after this mega run that has happened on Nifty. It may not fall too much also, because the bull run is just happening, and there may be further fuel that is left when Banknifty also joins fully, right? So it may not fall down, but it may take some rest before further up move in the September series. What the idea is all about. So range is 17,150 and 17,500 for 460, that kind of levels. So if it holds in that level, you will benefit, right? Position size according to what your capital is, and then the peak pop probability for it is not that great, but RiskReward is okay, 1.1. So relatively less riskier, right? So you can try that on the index, right? So the wrap up is that market is rolling bullish non-stop. Once again, right? You don't know where. It has made multiple all-time highs. Every day it's an all-time high. And so bulls are here to stay long is the message that we get when you look at the charts, right? Overall buy is mildly bullish, not very bullish for this week, just because of the fact that it had moved 900 points the last 2 weeks continuously. Now it should take some consolidation or rest before it can further move, is what my view on the market is, right? So entry at this point may not be something that is suggested, because you may have to wait for some pullback to happen probably. Bank Nifty also has joined. This is the contrary to what I said earlier. Bank Nifty has joined the party now, and it has long way to catch up. Like the all-time high previous is not as broken for the Bank Nifty. So imagine if that is broken and Bank Nifty further moves up, like how Nifty has been doing, at least half of that it is doing, then where would Nifty be? So that is something that gives indication that 18,000 also may be possible probably in the September series itself, but at least before in the October, right? Or the next quarterly results that time frame at least, right? But the VIX, as again, it's shot up previously, dipped 5% previously, and then shot up 8% this week. So this kind of spikes are creating a lot of problems, a lot of. So Friday itself, you see there was two V-shaped movements and two inverted V-shapes. So total four V-shaped movements. That means the price is zigzagging on a Friday. So it's very difficult for option sellers as well as option buyers. Right? This low volatility, when we have multiple choppy whipsaw kind of price action that happens, it makes it even tough. So new margin rules are effective on September 1st, and then some free trades is happening because of the freeze rule that is being restrictions were taken out by the SEBI. So that adds up to the fuel, means that more trouble, right? So you have to be cautious and put stop losses, limit stop losses, and position size less at this when there is things are not clear. Right? Wait for. It's not about stopping the trading. You can take small position sizes and then be careful. Swing positions, just on Wednesday or Thursday or 2 days a week with fully hedged can do the need for a stop loss, right? And that can, if it works out, your view is correct, right? At least if your range is correct, if you're not directional, there's a chance that you can make money instead of trading every day and then expose yourself to such fake trades and V-shaped spikes. It may be a good idea to take swing positions, that holds for 2 or 3 days in a week only, right? So positional trades, long trades, not advisable as I said to take at this point then, because you'll have to wait for a pull back to do that. But if you're already long, just have to keep in mind where are the support levels and resistance levels. That's all. So that's a summary, right, of what happened last week and what we can look forward to trade the next week. So I hope this is giving you an overview, how your trade can be planned as per your appetite and your ideas and your view, right? You can reconcile and um, you know correlate with my view and then confirm your view and trade, right? So if you find this useful, hit the like button and share it to your, all your friends and colleagues and whoever you think should benefit from it. It will keep us motivated to do this every week. Thank you so much. Happy trading and happy learning. Bye.